Welcome back. Well, there's been a big run-up in the power sector, and one of the big beneficiaries in this run is REC. The stock has seen a big run this year. Now, the green energy push by the government seems to be working for the power sector, and REC has set a target of around 3 lakh crore green finance loan book by FY30. To help us out with how business is shaping up, Mr. Ajoy Choudhury, the Director of Finance at REC, joins us on the show. Good morning, Mr. Choudhury. Thanks so much for joining us here on CNBC-TV18. Well, a couple of questions. Clearly, you have a tailwind from the sector itself. Your AUM of the last recorded number was around 4.5 lakh crore. What do you end this year with in terms of an AUM target? Point number one. And the fear for the street is the cost of borrowing is going up. So your NIMs could get compressed further. You reported 3.3% for the first quarter. What is the outlook? Because I think you've taken some increases on the yield as well. How does that shape up? Please go ahead, sir.
Good morning, and thank you for having me on your show. So, yeah, as you said, the power sector is looking good. I think the main reason is, the improvement in the distribution sector. The big elephant in the room has largely been taken care of. I think the efforts of the Ministry of Power has paid off. And that is bringing excitement to a lot of investors in this sector. The renewable energy, as you mentioned, is certainly one of the space which is very exciting and which is bringing a lot of good players and strong players in the market, giving us good business. Additionally, the upgradation and renovation of the distribution and transmission sector, that's also giving us business. And the non-power infra, where we are getting a lot of good projects from roads, ports, airports, metro, etc. So, all this is helping in the business to grow. Coming to your, on NIM, yes, our NIM has been under a little bit of pressure. We would like to have a NIM at around 3.5. So we are working out ways. The cost of borrowing, our average cost of borrowing as on 30th June was around 7.23. But our incremental cost of borrowing, we have employed some judicious mix of borrowing so that it has come down a little bit. So we hope to end up with, 10 to 15 basis lower than what is the average cost today. So, with, as you said, the benchmark rates are remaining elevated and, crude and dollar moving up, that's the best probably we can do. Yeah.
So, Mr. Choudhury, you're confident that the NIMs will hold at around 3.5%, right? So you're guiding for a mild improvement from what you did.
That's exactly that. Yes,
got it. Yeah. And your AUM, what do you end the year with from around 4.5 lakh crore?
Yeah, we are aiming at an increase of around 15% from what we had in 31st of March. Yeah.
All right, 15% increase in AUM in FY24. I got that. Now, Mr. Choudhury, you would understand, good morning, Prashant here, that there is a great deal of excitement. There is, of course, renewables which has to be built out, right? And that's a multi-year story. But at the same time, there is excitement that because from here we have to get to enough renewable capacity which can kind of power the country's needs, you need thermal capacity addition as well. And there's been no real big thermal power capacity addition over the last many years. So there is that cycle also, maybe a short-lived one, but nevertheless there is one. Can you confirm that for us, sir? Because, I mean, anyone's got to put up a power plant, you would hear about it first. You're the early cycle beneficiary in that sense. Can you confirm that is happening?
Yeah, I mean, see, the base load will have to come from the thermal and have some bit of hydropower. So because the power demand is also growing at quite a steady pace. So yes, some bit of thermal projects will be added, but of course the growth will be much slower than what it used to be. The renewable push will be far greater. So I think, as per the estimate, around 5 gigawatt of thermal power will come in the next 2 to 3 years. That's the kind of scenario that we get to know of. So we have also sanctioned 1 or 2 projects. Yeah. Yes.
Yeah. Well, no, are you involved in the latest NTPC project as well that they announced?
No, we are not involved with the NTPC projects, but a few projects of Madhya Pradesh state, there we have bidded. Hopefully we'll get those projects.
Okay. Mr. Choudhury, hi, good morning and thanks for joining in. Just a couple of more questions, right? One is on asset quality, which has been doing quite well, actually. I think the gross NPA ratio earlier had slipped to about 3.28%. Net NPA is also below 1%. Is there further improvement that one can expect in asset quality?
Yeah, absolutely. That's our core, area of this thing. We look at the asset quality. In fact, you see a slight dip in the margins precisely because we are conscious of the asset quality. So this year we hope to, resolve around 7,000 crores. That will be around 40-45% of our stress assets. We wish to resolve, and once we do that, in the next year, we want to completely clean our balance sheet, and we certainly don't want to add any more NPAs. It's been 6 quarters that we have not added any NPA, and we'd like to go like that only.
So you said you'll resolve 7,000 crores of stressed assets this year in FY24. And what is the outlook for FY25? Any guidance there?
Yeah, FY25, the balance, all of it should be resolved. That's what we are targeting, and hopefully we'll be able to.
All right. Just can you give us a quick outlook on credit costs as well for FY24 and 25? What would it be?
Yeah, the credit cost, currently our average cost is around 7.23. Incremental cost has been lower than that. So hopefully, by credit cost, you mean the provisioning, etc., or the cost of funds?
No, the cost of funds you answered. On provisioning, my question was.
Yeah, so, credit cost, we have made enough provision for the stage 3 assets. There is no issue on that. But on the standard assets, as per the expected credit loss methodology, we kind of make a provision of 80 bips. That's more than what the RBI prescribes. RBI mandates a minimum provisioning of 40 bips. But we are maintaining around 80 bips.
Okay. All right. Mr. Choudhury, I had a two-part question to ask you on your book. First, on the power segment, given that the power sector itself is improving, are you seeing more amount of competition coming in from other lenders, banks and the likes? That's point number one. And point number two is on the non-power segment, you're looking at growing that segment. And there's been a lot of measures on the power segment. So that's why things are improving out there. But do you think by lending to the non-power segment, that could be a risk as well? Because maybe controls are not in place. You're looking at lending to other non-power companies. Comment on both these two, please.
Yeah. So on the power segment, there will be a competition, definitely, as the power sector improves. And so we are up to it. But, there is so much of requirement in the power sector, at least till 2030, when this transition thing is happening. So we don't see, that our growth will in any way come down because of the competition. But we are mindful of the competition that will come in the power sector because of the improvements that's taking place. On the non-power infra, we are currently going with very safe projects, good entities, and with revenue tied up. And we have also engaged around 10 to 15 consultants who are experts in this field, who are guiding us all along. So here also, we are very conscious of the kind of quality of the projects that we take up. And all the entities are A-rated also. So that's how we are going about it.
All right. We'll leave it there, Mr. Choudhury. Great to speak with you. Appreciate you joining in. And it's a pleasure having you with us here on the program. I mean, that's the space where, there is a fair bit happening. And there needs to be a fair bit happening, especially on the renewable side of things.